All right guys, so we're gonna do another video that has limited to no editing. And today I wanna talk about why you should buy a house in Hawaii. I'm kind of contradicting myself, right? Because this video goes out to Randy, to several others, to Debbie, to a few people who are like, hey, you said not to buy, you said the market's not good. I don't know if you guys kept the video on all the way to the end where I kind of shed some light on the argument on why you should or it may be the right time to buy. But what I can promise you is I'm always gonna be real. My team is always gonna be real. We're always gonna be honest and forthright. In the end, it just depends on your timing, your financial position, your motives, your exits, especially, all of those things. Here's the other thing. When people were purchasing homes for, say, it was listed for $1 million, and everyone said, oh, it's going over asking. Well, asking's a relative thing. You know, some agents will ask 900 when they want $1 million. Some will start at $1,050,000 and work down to $1 million. It just depends on listing strategy in that home and that agent and that seller's approach to the market. So I don't put a ton of stock into over asking, but to overgeneralize, things were going over asking. And if a home only appraised for $1 million, but it sold for $1,060,000, that person brought $60,000 in cash to get in front of this accelerating market and to lock in a 2.5% interest rate, a 3% interest rate, whatever the cost was. Everyone's mad at the interest rates because they're at 6% and they missed out on the 3%, right? Well, Mr. Buyer, Mrs. Buyer, if you could pay $60,000 to your mortgage professional, to your loan officer, and buy that 3% interest rate, would you? Most of you are probably saying, no, I'm not gonna pay $60,000 in points. Like, I'm not gonna buy down points 6 times, 6 points. That's essentially what people were doing. Freedom Mortgage, Fairway Mortgage, Fannie and Freddie, the lender wasn't getting the $60,000, but the seller was. The seller was exploiting this extremely strong seller's market and taking that $60,000 in cash so that you could get your 3% interest rate and your home locked in at the time. Now, the home that's listed at $1 million, we may be able to get it for $1 million. And then you don't have to buy down points. Or maybe we get it for $980 or $970, it just depends, it's situational. We are seeing price reductions. So don't feel like you missed out on that is my point, because it was painful to buy. I mean, buyers had never been more pissed off on day one than when they were getting the keys sometimes, because they just like leveraged and burned $60,000 on the entry so they could take advantage of the market, the interest rate, and get into something. Granted, you're buying at a 5% interest rate, like I just locked in a 4.5, something like 4.5 on a 7-year adjustable rate. But if I did that today, it'd probably be 5 even on the ARM. My investment rate was in the 6s. I was gonna buy it regardless of which loan I got, even in the 6s. But I also didn't have to burn $60,000 over asking, over appraised value on the way in. So there is a positive side to this market. Sellers don't hold all the power anymore. Look guys, I've been seeing this all over Facebook from my real estate colleagues. I hate it, but people are saying, marry the house, date the rate. You can buy the house and eventually switch to a strategy where you like pay it off through a line of credit, way more advanced. Talk to me on the side for that. When rates go down, switch to a 15-year, buy, whatever the case may be, you can marry the house and date the rate. I just hate that because that speaks to real estate agents' bias. So let's get back into the buying thing. Why you should buy a house right now in Hawaii. So there's a whole argument, and it seems pretty obvious in the media. If you're a CNN person, a Fox News person, whatever you are, Instagram and Facebook person probably, all of the media is talking about how we're in a recession, which means we have 2 quarters of negative GDP, etc. They're raising interest rates to combat inflation. Inflation numbers came out, and is that like 9% or something? And so if inflation's at 8, you want interest rates a little bit higher. Inflation's at 9, interest rates a little bit higher. So a guy who I really respect and like following, Patrick Bet-David, if you're a basketball guy, he's the one who interviewed Kobe Bryant, like Iranian insurance guy. I love watching his stuff. Really skilled business person, really skilled scaler of businesses, and pretty savvy financial guy. And he thinks interest rates are going to go into the double digits by the end of the year. Thinks the chairman of the Federal Reserve and all of the powers that be are going to get us to 10% interest rate. So if we do get there, Does it make sense to buy now? Well, it just depends. If I'm really heavy in cash, or if I'm all cash, for example, maybe I'm a little more cautious, because if rates do go up and prices go down, then maybe I pounce on things when prices come down. But are they going to come down? So the conversation for buying right now, one, historically, if you buy in this beautiful land of Hawaii, in the long term, you don't lose money. That's not guaranteed. Don't say Derek said always buy. But it's hard to find a 10-year period in a market like Hawaii where your home did not appreciate. You're paying down all that equity. There's multiple tax advantages to owning real estate, etc. And so whether we snap back to 2009 or 2014 or present day 2022, we're looking at your exits. So if you bought a home in 2009 and you sold in 2019, you felt great about that purchase, even though you, or let's say better, you bought in 2007 before the cliff, sold in 2017. In 2017, you felt great about making it through that tough period. So even if 2008's in front of us right now, even if here in 2022, 2023 is going to look like blood on the streets, if you're not exiting in 2024, 2025, you're not worried. If you buy Apple stock at $100 and it goes down to 50, that only matters to you if you're selling Apple stock at 50. If you're going to be selling Apple stock at 100 or 150, the economic winter doesn't really matter. So our price is going to come down. Well, if interest rates get to 10%, I can't see how they don't. I mean, honestly, they've already started softening. At 3 listings on the west side here on Oahu recently, they took an average of like 6 weeks to get into escrow. Prices are coming down. We did price reductions on 2 out of those 3 listings. Home in Ewa Beach, we sold above asking. It depends on where the property is, how it shows, the inventory, but no one can argue that inventory has increased, days on market has increased, therefore prices have softened in certain markets for certain assets. Are we going to see a total of a 20, 30% correction where you should have bought at that time? Well, we can do the math on what entering the market. Say you're a VA buyer, you're a veteran, you're buying on a VA loan. The home was worth $1 million, now it's worth 800. You feel like a winner, and arguably you are. But if you're getting in at 10% interest when you could have gotten in at 4 or 5, are you winning? Well, it just depends. We'd have to talk about it and talk about your exits, and I'd say you probably are. But is that going to happen? Well, the price of lumber is going up, the price of copper is going up, price of land in Hawaii is not going to significantly go down in any way. Price of roofing, the price of the workers who are building the homes with all of this inflation and increased living expenses going up. And we simply have a supply shortage in Hawaii. Remember, 2008 was a unique situation. Go watch the movie The Big Short if you want it explained in an entertaining and in-depth way that I can't do here. I might not be able to do period, but I definitely can't do here in a 10 or 20 minute video. 2008 was a result of fraudulent and corrupt mortgage and finance, like SEC violations tied into mortgage-backed securities, tied into the whole world economic and financial system. It was a unique thing, but our recency bias tells us that that's going to happen again. I can't say that it isn't, but I don't think it is. With the supply and the inventory issue in Hawaii, this land is not going out of style. You know, those mountains over there, these homes in Mililani, they're not going out of style. There's a lot of people still moving to Hawaii. Most local people don't want to be pushed out of Hawaii. There's a supply and demand issue that remains regardless of the interest rates. We're in an inflating, scenario where the dollar is worth less, and therefore you need more of those dollars to buy things, including the things that are the materials to buy the home and to pay the workers who build the home. So some people like Dave Ramsey, some other economists, some other professionals feel that homes will continue to appreciate, but just at a slower rate, which is traditionally normal. A lot of people think home prices are going to continue to go down because they already have softened. In any case, I just closed on a home a week ago. It was the right purchase for me, for our financial situation, for the way that we are going to use it monetize it. Another video is coming on this. It's a shorter term rental. It made sense for me to buy despite the high interest rate. I could have bought it. I bought it for $975. I'd have to look at the data. I could have bought it well into the 800s just a year ago. Before that, who knows, maybe 800, 820, 790. I understand how much homes have appreciated and how late I got in. I still purchased. So I'm literally putting my money where my mouth is. This purchase makes sense for me. It makes sense for my exits. And I bought it right. I just went on vacation and these agents, they were very, very, very nice people. Very nice people. And I won't name them, but they were talking about, don't tell your buyer don't tell people that the market's shifting. Don't tell them that it's shifting. Tell them that it's normalizing. Tell them that it's a new market. So, it is shift. It shifted. Like, it's shifting and it's shifted. It's changed. Whatever you want to call it. Don't intend to deceive. Talk about it at length. Talk about it in an educated way. Look at financial position. Look at entries. Look at exits. How are you buying it? And the good news is today, you might buy that $1 million house for $980 instead of offering $1,060,000 and it only appraised at $1 million and you spend $60,000 just to get into it. Your rate's not as good, but hopefully we all can get better rates in the future, even on the one I just bought. And so I don't think it's a bad time for everyone to buy. I don't regret making the last video because I think that, in fact, I know I've gotten feedback on Instagram and on YouTube and stuff. People appreciate that we are being objective and telling people that it's not the right time to buy for some people. But you know what? At 2% interest rates, it still wasn't the right time for some people to buy. So there are no new truths under the sun. Principles remain the same. And it can be hard to find really skilled, really honest people and who are skilled in this profession. So if you need one of those, hit us up. We're good.
Hey guys, real quick, Mahi here with Core Team Hawaii. If you're interested in buying, if you need help moving to Hawaii, please fill out the contact form on our website. As always, our information is below. We'd love to hear from you. We're a small, dedicated team, but we're never too busy to hear from you folks. Check us out. I'd love to see you on a virtual consult.
MyHawaiiHomeValue.com. For sellers, or you know what, just for refinancers, for homeowners, you want to sell in a year from now, it's better to understand your home's value today. My friend lived there, sold her house during the pandemic, got her a house down the street off market so that Auntie, 95 years old, could live in the home on the first floor. The good news is we're able to reposition into something that she got for probably $100,000 undervalued. MyHawaiiHomeValue.com. My name is Derek Okahashi. My team is called Core Team Hawaii. I'm just obsessed with this stuff. I love real estate. I love talking about it. I love helping. So please, please hit us up.